Hello, hello. Thank you all for coming today. My name is Jayden Doye CPA, President and founder of Prestige Accounting Solutions. And I'm actually very excited to talk about accounting. I know that it's not a very exciting topic, but now's the time. Okay. This is the time of year when businesses need to think about their year end and think about what needs to get done. I also understand that most of you watching this are probably not bookkeepers or accountants, and you may have staff that handle this for you. So I'll keep that in mind during this presentation, and I'll be using simplified vocabulary and overviewing the process when possible. I want to give you a foundation on what law firm or legal accounting is. And a lot of the different items that we'll cover today um, actually center around legal accounting. Some of them will be general business. Um, it really will fluctuate. So throughout, we'll be talking about how technology can actually help you get ahead and get a handle on all of these tasks and processes. Most of the time, when you talk about accounting, technology is not the first thing that comes to mind. And we want to bring that into the equation so that you know the tools, the processes, and the technology that you use can only help your firm be more modern and more efficient. But we also want to help you with your accuracy. There's a lot to do with that as well. To get started, I'm going to start with the first point. So, what is general law firm or legal accounting? It really breaks down into three separate buckets. The first is general business accounting. So, what every business needs to take care of, worry about your income, expenses, payable, profit loss, your balance sheet, and tax reporting. That's fairly general. And that is just business financials everybody kind of needs to worry about. The interesting part is this is when you become a lawyer or join a law firm, especially for a solo or small firm. You're also taking up the responsibility of the business owner. So you have to worry about not only running the business, but you also have to worry about the business accounting. Even though being a business owner may not be your main goal in life, you're there to practice law and help your clients. So this area might be a little unfamiliar to you and might not be the desirable functions that you have to complete as the lawyer. But unfortunately, it's one of those necessary evils. Running a business does require those day in and day out financials, but running a law firm requires those two other pieces as well. So handling your matters and the cost that you pay out of pocket, how you get reimbursed for your by your clients, how those should be recorded on your general ledger, which is a little bit different than firm costs, your income. You bill your clients who receive payment for that, hopefully, and that income has to be allocated on your general ledger as well. Different variables come in with this income. You may have different matter parties, different timekeepers, different practice areas. How is all of that being tracked? And then last is probably the biggest compliance area, which is with fee advances and retainers, which often, more than not, is dealing with the trust account. So you need to make sure that you are well aware of the compliance requirements and that you're following them as best able. So keeping those areas of mind, think of your law firm. How are you doing these functions currently? So this is where I want you guys to go ahead and reflect. Who exactly is handling those accounting tasks? Is this something that you have completely done out of house? Do you have a paralegal handling it? Is there an office manager? Do you have an in-house bookkeeper? Do you have separation of duties? These are things that I really want you to think about as you are evaluating how exactly your accounting is done in your firm. Now let's get into the year-end checklist, shall we? The first thing you want to do is make sure that you finished your billing through December 31st, 2021. So through the end of the year, you want to make sure that you've run your bills. You want to make sure that you've applied any payments. Check and make sure that if clients have trust funds available to pay invoices, that those have been paid. Do your monthly invoicing as usual and try to get it done as soon as you can after the end of year or as close as to the end of the year as possible. The next thing you want to do is make sure that you pay any of your remaining accounts payable bills. AP stands for accounts payable. So moving on, when we talk about the bank accounts, one of the most important things that you should be doing all along throughout the year is reconciling your bank accounts. For your trust accounts, for your credit card accounts, and for your bank accounts, you should be reconciling them every month that you can. It makes the year end much easier if you've been reconciling all along. Because let's just say that there's errors that have entered your system. You'll be able to catch them easier when you do it on a monthly basis, while everything is fresh on your mind. If you wait until the end of the year to reconcile all of your bank statements and credit card accounts and everything else, if there are transactions that were entered incorrectly and you're not sure what they were for, and the bank statements don't give you that much information to figure out what they were actually for, can be a really hard task. It could be like deciphering a secret code. So I always recommend to my clients that you reconcile every month if it's possible. What does reconciliation mean? Okay, so I'll answer that for you. This is when you take the bank statement or the credit card statement, you look at what you entered in your books, and the goal here is to make sure that your books accurately reflect what happened in the real world. So if something appears on your bank statement and it appears on your books, you mark it off because it matches. If something appears on your bank statement and it does not appear on your books, then you're going to have to add it on your books because you want your books to match. If there's something that does not appear on your bank statement, but it does appear on your books, you have to figure it out. Is it something like a check that hasn't been cashed? And am I going to leave it there because it might be cashed next month? Or did I enter something wrong in the system that I really didn't do in the real world? So it's a way of making sure that your books accurately reflect what you did in the real world. And that's why it's a lot easier to catch these errors in the month in which you did the transaction or in the month thereafter than it is to wait to the end of the year and try to reconcile everything. Because if you're looking at an error back in January and it's December, that's 12 or 11 months ago. You won't remember that. So this is one of those tasks that's often neglected, but I would recommend every month, especially with your trust account. A lot of bar associations actually recommend that you reconcile this account every month. The other reason why it's smart to reconcile everything every month, that way you know that your trust account has that three-way reconciliation and that you are in compliance with the bar association. Now, when you are clearing these transactions, you need to make sure that you're clearing them carefully. There's a lot of activity on those bank statements. And sometimes it's easier to just take a little bit, go a little slow before you accidentally mark something off that is not correct. Sometimes the way that the bank describes it on the bank statement doesn't really reflect the same payee that it does in the accounting system. So you may think that something's an error, but it may actually be accurate. This is a very tedious process that sometimes matching your transactions for the bank statement to what the books say can be very time consuming, which is another reason why waiting until the end of the year, a lot of people end up not doing it at all because it's such a daunting task that they don't want to do it at all. That, that thought process that, man, this just seems like a mountain of work that I'm never going to get over. So I'm just going to act like the mountain's not there and move on. Okay. But this process can actually, if done correctly and done in a timely fashion, can actually not be that daunting. So let's kind of talk about the actual process, okay? While you're doing the reconciliation, you want to clear all the ones in the bank statement that are actually in your system. And the key is to track down the ones that either appear on the bank statement but don't appear in your system, or appear in your system but don't appear on the bank statement. And that is where the detective work really comes in. That's where you have to really do your investigation, do your discovery, pun intended, and figure out where exactly an error may have occurred. Okay. I usually like to start with deposits first, and then I move on to checks and withdrawals. Keep in mind, when you're doing the reconciliation process, you're going to actually, it's not done until you do both sides. So both money that came in and money that went out. Keep in mind that especially when you're reconciling credit card statements, there are things such as finance charge, interest, late fees that will be on the statement, but won't be in your system because you haven't actually been provided with the number yet. So at that point, that is when you'll make sure that the interest, finance fees, et cetera, are entered into the system. That way everything matches and you can clear your reconciliation. Also, with respect to doing reconciliation, whether it's a credit card or a bank account, if those client costs that you are advancing, you need to make sure that in your system you've posted it correctly. So it will go on the client's invoice so that you can bill them for that hard cost the way that you intended to. The next item after you've done your deposits and withdrawals will be adjustments, and these can be very tricky. There are several types of investments that are made by the bank. So basically, if you're done with your reconciliation, you've cleared all the transactions from your book, from your system, and you still can't get the bank statement to match, you're off. The book ending balance isn't matching your bank ending balance for that time period, and you can't figure out why. I'm always a big believer that if it's a huge amount of money, you should figure out why. If it's not a huge amount of money, it's in your operating account. You can make an adjustment to your books to match the bank statement, call it good and move forward. But I only recommend that you do this for your operating account and only if it's a de minimis amount. I'm talking less than $1. If it's a major amount, you need to track down where that error is, and it may require you to pull in your bookkeeper or someone that knows what they're doing to track the error. If you're talking about your trust account, a client trust account or Iota, you can't have any errors and you can't just do adjustments on those. It's not recommended. And you better check with your bar association because you really shouldn't be doing that. Before doing an adjustment means you're either going to be entering a withdrawal or a deposit into your bookkeeping system. So to make it match your books in your bookkeeping system, you want to make sure that that amount can't be tracked down. Sometimes, believe me, sometimes it's actually the beginning balance entered incorrectly in the system, and that actually is why the reconciliation won't match. But you always want to check if there's a transposition error. A lot of times your book ending balance isn't matching your bank ending balance because you transposed numbers and your brain, while you're looking through it, transpose the numbers as well, and it's looking right at you. So always check for that. Transposition errors are very common, and when your bank ending balance and your book ending balance don't match. So one thing that I actually learned um, in elementary school, actually, an easy way to check for the transposition error a lot of times is if the out of balance amount is divisible by 9, then a lot of times there's a transposition error. Let me give you an example. Let's say that your reconciliation difference is $90. So $90 is evenly divisible by 9. And in this example, a payment of $100 was incorrectly entered as $10, creating a $90 difference. When you're running through all of the transactions, it can be very easy for you, as you're rushing through, for you to assume $10 or $100 is the same. So make sure you take your time as you're going through those transactions and marking them off. So moving on, that's reconciling throughout the year. And we talked about instead of just doing it at the end of the year, we talked about doing it each month. The next step is to review your trust account. You want to make sure that your trust account balances are correct. So you want to check does each client's trust ledger show you the amount that you expect to see for each client? If not, you have to figure out why and where there might be an error. If you've been reconciling every month, this should be easy and it should be accurate, but you should still do a double check. Also, you want to see if there's a trust balance. Have you billed everything that has been entered? Have you billed all your time? Have you billed your hard costs? Because if you have, you want to be able to pay it out of the trust and make sure that you're being reimbursed for the work that you did. You want to look at when the last transaction in or out of this trust account happened. If it has been a year or more and you haven't had any contact with the client, you don't think that anything you're going to have to do in the future, then you need to figure out if you will refund the money or if they will re-engage. If you want to refund the money, do you know where the client is? And if refunding it and the check gets returned to you, you need to know the process for what you'll do to actually refund the money. You need to check with your bar and your state, because a lot of times the answer is you have to do what the state people will tell you to do with unclaimed funds. Then you have to go to the state and figure out what the state people will do with unclaimed funds. And they'll go through that process with you. This is a good time to clean out those files that are getting older and get rid of those funds on cases that are closed, get the process started, and get it taken care of. If the work's done and you've been paid from the trust and there's balance left and you don't expect there to be any more work and the account's inactive, then you'll definitely want to refund the client what's left in the trust. Year end is a good time to take a look at all of those accounts and do this cleanup so that it's done at the end of every year. So that hopefully you don't get to the point where you have clients, you have no idea where they are, you've got the funds and it has to be returned to them, because that can be a pain. If you have to go through the state and use the unclaimed funds process, it can get very complicated. It's way better to take care of it at the end of every year where you still know where the client is. You want to go through those client trust activities. Make sure you haven't missed any withdrawals from the trust on the client's matter. Make sure you haven't overlooked any deposits to the trust, and that you have all the deposits and withdrawals entered into the trust account that are attributed to the correct matters. You want to make sure that if any fees are owed, if there are any unpaid invoices, and if the funds in the trust are being held specifically for advanced fee deposits rather than being held to pay out a settlement for the opposing party, that those funds have been used to pay out any outstanding invoices. If there are any outstanding expenses that need to be paid and there are funds available that you need to pay, then you want to pay out those expenses. If the matter is inactive and you've got trust funds refunded, it's the perfect time to refund it to the client and get those funds out of your account and make sure that you don't have to deal with them anymore. And be careful, because in some states you are required to send an annual trust ledger. Check every single client who's got funds, whether there's any transactions in or out the trust ledger or not. So know your state bar rules and whether or not you need to send the trust ledger report and every client that's got funds with you. Because if your state requires it, you need to do it. You want to balance your trust accounts. Again, you should have been balancing them throughout the year, but when you get to the end of the year, make sure you've balanced them throughout the year all the way to December 31st. Then make sure you've printed your three-way reconciliations. These reconciliations say that here's the total of your Iota. Therefore, three-way pooled trust accounts, when you've got a trust account that has 10,000 in it, but a portion of that 10,000 belongs to one client and a portion of that 10,000 belongs to a different client, you'll need to keep track of which portion of the 10,000 belongs to client A versus client B. So what a three-way reconciliation report does is it actually breaks down how much of that $10,000 belongs to each client. And this you can show to your bar association so they know all of the subsidiary ledgers that make up that pooled fund in the Iota account. I would print this out to paper every month, just in case the internet goes down or the cloud-based system goes down, you have a hard copy. A lot of people save these as a PDF in their electronic filing system, and that's great. However, if the whole system went down, then what would you do? You wouldn't have access to it, and therefore you would not be able to provide that to your bar association in the event of an audit. Now, there's another group of reports that your accountants need to see. And if you're dealing with business operations, these are the reports that you use on a regular basis to see how profitable your firm is. Do you have loans? Do you owe people? How do you have enough money, assets to cover these loans? It's a way to take a stock of how healthy the company is. The first financial report we're going to talk about today is the balance sheet. Sorry about that. This is a financial report that shows the assets, their value to the company, and your liabilities. These are the things that the company have coming in and going out. You owe money to somebody. For example, a credit card, a loan, or a line of credit, that will be a liability. And if it appears on your balance sheet, you want to look through those. You want to start with your assets. Did your firm purchase anything that is to be held for a long term that was expensive, and your accountant told you that you can't expense it once it was purchased? It's because it's a big expense and you're holding on to it for a long period of time. If that's so, you want to check your balance sheet and make sure that it was added to your fixed assets column. Does it show up as a fixed asset? Did you post your client cost advances there if you're tracking them as an asset? Some firms don't track them as assets. Some firms expense them immediately when they pay them. And when the client reimburses them, they show the reimbursement as income. That's going to appear on your profit and loss. So if you're tracking them that way, you don't need to worry about them on your balance sheet. But if you're tracking them as loans to your clients, then and when you need to be repaid, you don't report that as income. You need to make sure that all of your hard costs and and fees to be repaid are showing up on your balance sheet. You want to post any accrued depreciation. You want to post any bad debt expenses, provided that you are eligible for that. Now, this is a report that your accountant is definitely going to want to see. You need to provide this to them at the end of the year. But you also want to look at you also want to verify that all of your assets have been captured on this balance sheet before giving it to them. You also, after you're done with the assets, you want to move over to the liabilities. Did you take out any new loans? Is there any money on your line of credit? Did you open a new credit card? Are you carrying credit card balances? Are those balances correct? Have you reconciled your credit card accounts to make sure that the amount showing up on your credit card company is correct? You want to make sure that you've recorded all of your payments and that you've made on these loans or those credit cards or those lines of credit. You want to make sure that you're recording those payments, the payments to any liabilities actually, and that the interest has been posted and assigned. You want to make sure as you're processing these payments that the appropriate portion of principal versus interest has been applied. That the appropriate portion of principal versus interest. All right, the interest portion doesn't go on the balance sheet. This goes on the profit and loss. Now, this is where things can get a little complicated. If you're having these type of transactions, you definitely need to work with the bookkeeper or an accountant to ensure that they are entering them correctly. Because if you put the whole payment towards a liability, then it will not present correctly on your balance sheet. I've seen this many times with the law firm DIY people that love to do their own books. Moving on, you want to make sure that owner's draw has been accurately entered as well. If you're using the business credit card for a personal expense, you want to make sure that it was entered that way. If you have an LLC and you take a draw against what is owed to you by the firm, then you want to make sure that the due to, due from account has been created and the draw actually is coded to that account. A lot of times firm owners actually have an agreement to which they get a certain percentage of what was collected. And you want to make sure that those are coded correctly. Are your retained earnings reported correctly? Did your net income from the previous year roll over into retained earnings, or did you record it where your accountant wants you to record it if they didn't want you to record it in retained earnings? So for example, in a partnership, they don't have retained earnings, they have partner capital. If you as the owner put capital into the business, if you had to loan money to the firm, you want to make sure that it's recorded as the appropriate type of contribution on the balance sheet. Again, if you work with an accountant or a bookkeeper, they should be able to make sure that all of these things are recorded accurately. One of the hard things that people that are trying to understand their own books have a difficulty understanding is the concept of when owners of the business either put money in or take money out. And an accountant will be able to properly walk you through what exactly that means. Anytime you take money out of the business, anytime the owner receives money, it may be a loan payback, it may be an distribution of profit, it may be a salary. So we want to make sure that this is accurately noted so that when it comes to processing the tax return, that the balance sheet is correct and the income statement is correct to avoid overpayment of taxes. Moving on to the next financial report you're going to review. This is going to be your profit and loss. This report shows you what you've made in any given year. You can view this report for any given time period. Usually you'll view it for each month. What I like to do is actually print the P&L for the whole year and make the columns each month so that I can see any type of trends throughout the year. Did you earn more than you spent in all of those months? On months that you had a high advertising expense, did you see an increase in revenue that month or maybe 90 days later? On this P&L, you'll be able to look to see that all of your payments were accurately reported. You should be able to see discounts on that P&L. And if the number looks off, then that'll cause you to go back into your invoices to verify that discounts have been appropriately recorded on that P&L. Did you record your hard costs correctly? If your hard costs are tracked as an expense when you pay it, the reimbursement from the client will show up on your P&L. If you're not tracking it as an expense, then we already talked about that. It will show up on the balance sheet. You also want to take a look at your general expense accounts. You need to make sure that your basic office expenses have been put there, your rent, office supplies, all of that. If you've got payroll because you've got employees, you need to make sure that all of your payroll information has been entered properly and that all of the payments have been entered for all of the expenses and that you've been tracking them and reconciling them on the bank statements. Provided that you're actually doing your reconciliations every month, it will make it easier for you to capture expenses that haven't been paid. So every month you pay rent. So if you pull up your profit and loss by month for the whole year and you see that rent expense is missing for 1 month, then that'll cause you to go back and do some investigation and figure out what exactly happened. Maybe the owner might have paid something out of their personal account. Therefore, the person processing the bookkeeping did not know to enter that transaction on the books. But if you're doing it every month, it's easier to capture things like that so you're not spending too much time doing discovery at the end of the year. All right. So that was the P&L. And let's move on and talk about AR. AR stands for accounts receivable. Now, you want to look at your AR report and see if there's any amounts that you're going to write off, or are you going to send to collections? Do you actually have a process for this? Are there letters that you send out? Is there anything that you can do to try to get them to pay past due bills? It's a good time to take stock to see if there's any place you can try to get extra money if you need more revenue. If you are going to create a letter, you want to create a dunning letter, a letter that you send out to your clients if they're past due, like 90 days or 60 days, saying, we're going to do this, we're going to send it to collections or do this, or we're going to withdraw. You can send it to them and have a stock letter so that you can have your staff send it out if you want. You want to check your client's retainer balances. Are there any invoices that need to be paid on? Are there any inactive matters that have trust funds that you should be returning those trust funds? It's a good time to clean house and make sure that those trust funds that you have in the trust are truly trust funds and don't need to be refunded to the client, and that you should be using, or if you should be using them to pay invoices. Now, if it's truly advanced fees on monies that you're holding and trust on behalf of the client and there's nothing to apply it for, then it needs to stay there. The last thing you need to be aware of is if you pay the contractors by check or wire and you've paid them $600 or more over the year, you need to issue them a 1099. Now, this is actually changed depending on who the vendor is. That'll determine if you send them a 1099 miscellaneous or a 1099 NEC. In addition to filling out the 1099, you'll need to prepare the 1096, which is the cover form for all of your 1099s. This has to be submitted to the IRS by January 31st. And there's penalties for late filing. And there is a way to get an extension for this. But ideally, you have been collecting W-9s for your vendors throughout the year. So this process is not too daunting in the month of January to complete. Ideally, all of your vendors have been paid and their payments have been tracked in your accounting system. So it's just a matter of clicking a few buttons to prepare those 1099s. Now, that last point was pretty important, okay? Check throughout the year and verify that you've been collecting your information on vendors. So many people forget about this. And I know a lot of you may be thinking, wait, I'm supposed to be doing that? Or you may be thinking, oh, yeah, I haven't been getting this done. You may have been asking some questions. You may have some questions for your accountant or your bookkeeper. So I want you guys to know that now is not only the time to think about the end of the year, but also think about what changes that you're going to make next year with your accounting systems. So next, I want to give you 5 tips for better accounting in 2022. The first one is to eliminate duplicate data entries. To be able to not enter the same piece of information, especially financials, multiple times, you want to reduce that as much as possible because this is time consuming and it can result in inaccuracies. Reflect into your current system. How are you and your bookkeeper doing it, or whoever's doing it? And see how you can actually cut down on duplicate entries. Sometimes it simply comes down to the tools that you're using. If you have separate tools for billing and another one for accounting, then that makes it very easy for duplicate entries to show up in your software. Some are legal specific and some are not. Are these systems actually communicating with each other? Do they all involve your billing, trust accounting, and general accounting? All 3 of these pieces are very much involved and make up your firm's financials. So what you want to do is make sure that these functions are very closely linked very often. So it can be just the tools that you're using that can create those gaps and actually cause those things to fall through and result in a lot of inaccuracies. As you can see in this lovely photo, this is what it looks like when your billing world and your accounting worlds are not on the same page. There's gaps that are very easily made, and it's so easy to fall through those gaps. Next, you want to make sure of Iota Compliance. This is talking about those trust accounts. There's a lot of things to keep in mind, and know that each state has their own requirements for what reports are needed. But you should be aware of what can happen in the event of an audit. What if you're audited tomorrow? You don't have to be doing the accounting in your firm or be aware if things are going correctly, but I suggest maintaining and cleaning and keeping accurate books. You want to make sure that there's no overdrafts, make sure that the ledgers are separated out. When I say separated out, I mean the subsidiary ledgers for the trust account. You know how much is in every customer's account. Every month, you should request a stack report from your bookkeeper or your accountant, or if you're doing it yourself, you should be able to produce these reports for your own and find out how to audit yourself. That is how you will know that you're on top of everything. You also want to account for from the general accounting perspective. Trust money is a liability to the firm, not yet income. You want to make sure that you're holding on to that balance sheet, holding it on the balance sheet until that income is actually earned. So when I look on the balance sheet of a law firm, I can easily tell if they're out of compliance because that the bank balance and the trust liability accounts will not balance to the penny, and those should be exactly the same. Number 3, you want to aim for full cost recovery. Client costs are those costs that you're paying out of pocket. This is one of the ways that incomes can be lost. In a way, it's completely preventable. So again, I mentioned in the beginning that double data entry, and that's because there's a billing and accounting split. If you're paying expenses out of pocket and you don't have an effective way of billing them to your clients, you will not get reimbursed for those, and that will affect your bottom line. That's one great tip I can give you guys today. See how those costs are being billed and look at the likelihood that you could be reimbursed. We want to make sure that we increase that likelihood and that we have a seamless system that ensures that it happens. You should be using legal specific tools for billing and accounting. Number 4, legal specific needs. Use a legal specific tools for billing and accounting. Tools like QuickBooks, Xero, or general accounting tools don't usually work for everyone. They work great for general accounting tasks, but not the ones that are compliance related. So it's always recommended that those type of functions use something a little bit more tailored to the industry for your compliance requirements. Some of those examples include safeguards, matter records, compliance reporting. Know what's needed for your firm and make sure that you have the tools that can deliver that. And the last tip is to leverage modern technology to increase efficiency and accuracy. As a millennial, I love modern technology. There's a lot of ways that modern technology can help, like bank feeds, connecting your bank and credit card and trust account to your accounting system, even things like online payments to make sure you get paid in more of a timely manner, automatic reconciliations. You can reconcile electronically instead of just looking at the physical paper statement, and even as simple as having your compliance records readily available. In these legal specific tools, you're able to generate a trust specific report with just a click of a button. Having the right tools can definitely help in this process and making it more efficient, increase your accuracy, and make that end of year process so much easier on yourself and your staff. The last point is, for those of you who use an external bookkeeper or think about it, think of cloud technology. It's such an excellent solution when you have outsourced help because they can work from wherever they are. You can continue to work from wherever you are. They can address issues right away. They can update records in real time. It doesn't matter where they are. So if you're not using that, it may be something that you want to look into rather. And for those who are not familiar with Cosmolex, I'm actually a Cosmolex partner. And Cosmolex is a cloud-based legal practice management tool that includes everything you see on the screen: billing, business accounting, trust accounting, all of your daily activities, your documents, your emails, your calendars, your secure client portal. And the thing I really like about Cosmolex is that they will literally find money for you, like a private investigator. They will, based off of your activity, they can find time that you've put into the system but have not billed for. Therefore, you won't be missing out on that income that we talked about earlier. And if this is something that you would like to learn more about, feel free to give my office a call. Or if you're in need of help with your year-end accounting, if you have noticed that the company that you're working with is not providing you with timely financials, or managing your firm's finances is really becoming overwhelming, and you don't want to spend valuable time managing your finances when you could be putting that time to billable activity, then give my office a call. Here at Prestige Accounting Solutions, we will be glad to talk to you. Our phone number is 833-672-2268. And again, thank you so much for your attention today. If you would like more information like this, I recommend you go to our website, accounting-atlanta.com, and join our email list. Also, if you check it out, you'll see that we have a free ebook on our website for lawyers so that you can learn the mistakes that may be putting you in risk of losing your license. And we don't want that. Thank you so much for your attention today, and I hope to see you in a future webinar.